Good afternoon, everybody. Going to go over our Forex trades for today, Monday, February 29th. Hope everybody had a great weekend. So we had one trade. We didn't have any scalps, any swings. This is a correlation trade that we've been for over a month. So we had full size as far as towards the end of every month, we cut our trading size in approximately half. So this is full size, but 20% of our full size. We took the loss of about 5.7 pips on a size adjusted basis. On a non-size adjusted basis, we lost about 28 pips. So we're going to go over that in a second. First, the economic news this morning. Bank of America revised their fourth quarter GDP numbers to up 1%, but they cut the first quarter GDP numbers to just 2% amid weaker inventory. ECB came out with their, well, it was supposed to be inflationary numbers, but it came in with deflation, plunged to a negative 0.2%, the lowest in a year. And funny enough, the ECB started doing a QE, a quantitative easing program, about a year ago. And they've spent 670 billion euro and to try to prop up their European economy, and they've actually created deflation. So they can't even create inflation. So obviously throwing money at economic problems around the world is not fixing things. The Dallas Fed index came out with a negative 31.8 reading, which was horrible. Dallas Fed employment index came in with a negative 11.1 estimate reading, which is far below estimates. So terrible news there. To make things worse, pending home sales, which we've been so negative on homes, came in with a negative 2.5% versus an estimate of a growth of 0.5%. So you're talking about a huge miss there on pending home sales. It's the most in over 2 years, so not looking very good again in housing. And to top it off, the last one, the Chicago PMI came in with a reading of 47.6, which missed estimates of 52.5. That lowest estimate by all analysts was 48, and it came in at 47.6. So it even missed the lowest estimate. The employment in Chicago PMI index crashed to 7-year lows. So if anyone wants to say the economy is strong, they're absolutely out of their mind. Let's just face it. Let's say what it is, right? And we are in a recession because we have manufacturing has been in a recession for a while, and a week or so ago, services dipped into recession for the first time. So we could officially say the economy is in recession. You may hear otherwise, but the readings and the numbers, they are what they are. People will try to spin it and whatnot. So let's get over the correlation trade. Like I said, we've been in this thing for about a month. So we did our normal size. We did 20% of our normal size instead of cutting it down as we normally do at the end of every month. We took the loss on this of 5.7. So it was Aussie yen correlated with Kiwi yen, which is the New Zealand dollar to the Japanese yen. So we were long Aussie yen from 84.918. We got out of it last night, sold at 80.838 for a loss of 367.2 pips, or size adjusted 73.5. And then the Kiwi, we were short from Kiwi yen, we were short from 78.121. We covered this at 74.727 for a profit of 339.4 pips, or size adjusted 67.8. So therefore, size adjusted, we lost 5.7. We had 20% of our normal size on both of these, as they are volatility levels are pretty equal in these two pairs. You might possibly pair back Aussie yen to about 95% or 90% of Kiwi yen, or you could go completely 100% as we did here. So like I said, we've been in this thing for about just shy of a month, and we took the loss of 5.7. So that's it. We're going to wrap it up. If any signals come out, they'll be coming your way. If you're still trading now, good luck. And assuming we have some action tonight, tomorrow morning, we'll be back tomorrow with another video. Have a great rest of your day.